Bag FX with another video for y'all. Today is Sunday, November 5th. Today I'm going to go over the ICT Silver Bullet. I've shown you guys plenty of London stuff. Not London stuff, that's rude. London trades, how to trade the ICT Judas. This is a different mechanical setup for the New York session. It's recommended to be traded on SPY, NASDAQ, and other Forex pairs, SPX as well. The rules are very simple, very laid out. There's not that many of them, but we trade between 10 and 11, which are indicated by these green lines right here. We wait for some type of liquidity to be taken. So whether we take the highs or the lows, liquidity, and then we wait for a move back into some kind of opposite direction, leaving a displacement, causing a market structure shift, aka when we go from lower lows to higher highs, or vice versa, higher highs to lower lows, when the market has changed its direction. And then we leaving some kind of gap, fair value gap, we enter on the fair value gap and we simply target just a simple two to one risk to reward. It's really, really simple. I know I said that very quick, but I'm going to get to an example and show y'all exactly what I mean. All right, so boom. We have our 9:30 Judas open. Our 9:30 open, which is normally our New York session Judas swing. So some kind of fake out. We've taken out liquidity from the pre-market. We took out Friday's liquidity, and we've taken out some liquidity left from last week's Thursday. So now at this moment, we'd be looking to sell because we've taken liquidity, and now we're going to wait for a displacement causing a market structure shift, which you can kind of see right here. We did get a bearish engulfing candle to the downside. It left a gap. You could have entered here, but we're going to wait for a session. Another fair value gap right here. And this one is coming right before the session, so we mark this one off. Pull her out. And let's just take a sell right here. We take a sell right there. We target a simple 2 to 1, so we put our stop loss above this third candle and 2 to 1. Boom, boom. Next candle immediately tapped us in. There's your 2 to 1. And now after a 2 to 1, you can target these inefficiencies, these fair value gaps down here. You can target session low liquidity, New York, midnight open, Asian low. There's many, many options after that. So let's play it out. And boom, we've literally hit New York open, options open, London opening price, Asian session low, which is what the green or the blue line is. And you could have hit your 2 to 1, left a runner, and grabbed another almost 6% on just that one runner alone. But let's put this back at the 2, because that's all we're going to be looking for. We're going to be strict, non-greedy traders. And that was Monday of last week. So let's get you to Tuesday real quick. All right, here's Tuesday, same week. And let's go. We get our open. We get our 9:30 Judas, which is normally a fake out move. So what happens at 9:30 when the market opens? We get all that volume. We get all the people thinking, oh, we're going short. We're going to go that way. Nah, bro. What we're really doing is coming to get these orders down here and some orders over here and then rip your ass back the other way. Hate to say it. So let's see. Yep. We just took out Asian, or basically London/Asian lows. So now we're going to zoom in and wait for our market structure shift back the other way. And we get a small one right here. Right here. You could enter in right here, but let's wait for one that's in session. Here she is. We're in past 10 o'clock. We have a fair value gap. We have a market structure shift. We were going high, low, lower, high, higher, low, higher, high. We've switched structure. Now we can pull out our buys, and we're going to put our buy on our fair value gap with our stop loss below the third candle. And then all we're going to do is target a 2 to 1. It's really, really simple. You start with your 2 to 1. Don't think about anything else besides a 2 to 1. Once you secure 2 to 1, then leave your runner and go from there. Don't leave your whole position on and allow it to potentially reverse on you. You'll be sick to your stomach. So let's see if we get entered in. Let's see. Nope, not yet. Maybe we could still get entered in. I believe. Oh, there it is. Remember, the market has to correct itself and fill these gaps before we can take off. So now that we have filled this gap, we should be getting some big boom boom candles to the opposite direction, going back to where we are, like where we're intended on going. The market has done its job algorithmically. So let's see. Look at these big candles. Exactly. Boom boom candles. And there's your trade. 2 to 1 right there. Boom. That's it. I'm not even gonna go over targeting anything else because what else do you need? 2% a day, risking 1%, you risk 2%, you just made 4%. Like, no need to be greedy. Like, did we get all the way back up to AM liquidity? Sure, we should. Theoretically, the market should get back up here. But say you get your 2 to 1, you leave your little runner, and then you just walk away for the day. You just walk away for the day and you don't care what happens. It can come back down, take you out, break even, whatever. Who cares? You're done. You've collected your bag for the day and we're out of there. But if you did leave a runner, it looks like it's going to hit. Look at that. And the runner hit right before market close. Cool. Love that. All right, let's go to example 3, Wednesday. All right, here we are on Wednesday. So same thing. You see the rules. We wait for our session. Let's see. All right, we have our 9:30. We're in 9:30. We're moving on up. Oh, bring that back a little bit. All right. Now, this might be a little hard for some people to see, so I'm going to drop down to a line chart real quick and let's mark her off. So we got a high, our higher low, our higher high, our higher low, our higher high, our higher low, a lower high, a lower low, lower high, lower low. As you can tell, we had our market structure shift right here. Now let's see where the rules. Watch this. So liquidity was obviously taken. We don't even got to go back and look that far. Liquidity was taken a long time ago. Now we're going to wait for our displacement causing a market structure shift. So we get our market structure shift. Now we have a displacement, leaving a fair value gap. And what do we have? A fair value gap. Let's mark her off. Oh, boom. We got 2 of them. You always want to take the closest one. Take the closest one. Trust me. Just trust me on that. So there's our fair value gap. So we know we're selling. Did we get triggered in right here? Nope. Because we're going to wait for what? 10 o'clock. Oop, let's get a sell, not a buy. Sell. 10 o'clock. Boom. Stops above the candles. Let's see. Technically, because there are 2. Yeah, we'll just stick with this one because we chose this one. And then we got a simple 2R. Price tapped this in. Boom. Quickly. And then say if you did, like, that's what I was going to say. When you do have 2 fair value gaps right next to each other, sometimes it is better to treat this. So you got 1, 2, 3. That's the fair value gap we chose. When you do have that 4th candle that is included, sometimes it is good to put it past that 4th candle which would have been safe. But let's be honest, who enters a trade and doesn't give their stops any room? If you enter your trades and you put your stop loss in right away, you're 9 times out of 10 going to get your ass crashed. Just know that. So I put mine right here. I don't have an active stop yet until I'm in profit. That's when I put my stop and then move it to break even. We've hit our two. Let's see if we get anything lower after that. Let's see if we hit any kind of liquidity after that. We had our runner. Nope, it reversed on us. And then even if you do take the fair value gap right here, this would have been an L for sure. You would not have got your 2R for sure. You would have got a 1R, but not the 2. So yeah, like what's that? Two trades. Monday, Tuesday would have been a winner. Wednesday would have gave you a loser. You would have been up 3% going into Thursday. No complaints. Like, and then most people don't even trade Friday. Like, it's a very good strategy. It's very mechanical. It's there every single day. You just have to be on the charts, ready and willing to see it. But that's all I got for y'all today. Y'all have a great day.